I'm going to start by showing you a chart. This is the market capitalization of the crypto market for over the last 13 years. You will notice that the market peaked at the end of 2013. It peaked in January of 2018, and it peaked again in November of 2022. If this trend is to hold, that means that the market will peak again in either November or December of this year or the first week of January next year. If you look more closely at the 4 years of a bull cycle, so the bull cycles in crypto last only 4 years. And at the end of those bull cycles, we enter a bear market. Now, if you look at each of the years of those bull cycles, you will notice substantial gains are recorded in the last year of that bull cycle. Let's look at Bitcoin. It started 2013 at a price of about $13 and ended the year at a price of about $1,100. It started 2017 at a price of about $1,000, ending the year at a price of $20,000. And in 2022, it started the year at about $29,000 and ended the year at $69,000. It started this year at a price of a little over $100,000. It's quite likely that if, again, the historical trends and patterns are to hold, it will end this year substantially higher. Although the last year of a bull cycle is usually a great year when it comes to the performance of most crypto assets, this year has been different. And a lot of that has to do with the trade wars, the tariff wars, the fears of recession in the United States. The macro conditions have not been ideal. But based on what has happened in the past, when the poor performance of the crypto market has not been due to self-inflicted wounds, and it's been due to macro conditions, the market usually rebounds strongly when investor confidence returns. This happened in 2020 following Black Thursday, which is when the major markets crashed as a result of the COVID pandemic. And it does seem that confidence is seeping back into the market. So one metric that I like to look at is the spot Bitcoin ETF outflows and inflows. ETFs are exchange traded funds, and these give investors who would rather not hold Bitcoin exposure to the asset. These funds issue shares that people can buy on the stock market, just as they would buy shares of Google, Apple, or GM. One of the largest ETFs is the iShares Bitcoin Trust, which is managed by BlackRock. Currently, one share of this ETF is about $50. When these ETFs record outflows, it typically means that investors do not want exposure to Bitcoin anymore, and it's a bearish sign. But when they register inflows, it means investors want exposure to Bitcoin, and it is a positive sign. So for the first time in 5 weeks, these ETFs registered inflows that were worth about $744 million. Other crypto spot ETFs did not fare as well. Spot Ethereum ETFs are still registering outflows. That the Bitcoin ones are registering inflows, I think that's a positive sign. Another metric that I like to look at are the inflows and outflows of Bitcoin from exchanges. So this chart was created by Coinglass, which is an analytics platform. The red bars are net outflows and the green bars are net inflows. So for the period beginning the 31st of May to where we are right now, there have been more outflows of Bitcoin than inflows, and this is a positive sign. When there are more outflows than inflows, that means investors are buying Bitcoin and then sending it off the exchanges into cold storage. That reduces selling pressure on Bitcoin, which can help the price. When the inflows are greater than the outflows, it suggests traders and investors are sending their Bitcoin from cold storage onto the exchanges, typically to sell it. this will apply selling pressure on the price of Bitcoin, and the price will go down. So that the outflows have been greater than the inflows is a positive sign. It indicates we are still in a bull market. Listen to me. These are two metrics that I think are helpful to monitor and that can guide you on investment decisions. Although the macro conditions have not been ideal, there are signs that confidence is seeping back into the market. If the next quarter of the year is less turbulent, then it's highly likely that the market will rebound. So this is all that I have for you today. Thank you so much for watching. If you like this content, please like and subscribe, and I will catch you in the next one.